Hi everyone, today I'm talking about Align Technology stock, which is a company that I invested in last quarter. And I invested in last quarter because of the stock going down absolutely huge. Eventually dropped down to about the $190 range. And after that last quarter, which pretty much the stock struggled from a lot of other competition and people switching from Align products to other products. It was a rough quarter for Align, but basically after that quarter, they said that a lot of them customers are already starting to return because Align Technology has the superior product in that sector. Now, Align Technology actually released their earnings report for the Q3 yesterday, and that actually led the stock to go up. And I've got the earnings report right here in front of me, and I've highlighted a few things from the earnings report. I'm going to talk about Align Technology stock because it is a company I'm invested in, and talk about what I'm going to do with Align Technology stock going forward because it was a pretty much fantastic earnings report. Guys, I would appreciate if you do give the video a like and subscribe because when it does get to round to earnings season, if we do have 1,000 subscribers, I can actually live stream some of these earnings, which will be pretty cool. But thank you for that, and we'll get stuck into Align Technology's earnings report. So Align Technology earnings beat EPS by 0.08 cents, and it beat on revenue, and the revenue was a 20% year-over-year growth. And after this, it actually led the stock to go up 14.7%, which was fantastic. And you can see that it's now bounced quite far off the $190 where it was only at a few months ago. So if you were looking into this stock, guys, I have kind of got the feeling that you might have missed out on that one. But when we actually go into the actual earnings report, some of the standout things for me was the revenue was up 20.2% year over year. The Invisalign volume was up 20.7% year over year. The scanners and services was 16.5%, and the actual cases for teens and kids were up 31.5%, and net profit of $102 million, and that was $1.28 diluted EPS. Now, where most of this came from in the earnings reports was, according to Joe Hogan, who's the CEO, is that the third quarter outlook driven by better than expected volume across the Invisalign portfolio in the Asia Pacific and Latin America region, and this reflected record highs for both regions and improving trends in North America orthodontic channel. Now, as of September 30th, Align had $782.4 million in cash, so that little cash you earn definitely helps the cash pile build up a little bit more. Remember, there's no debt on this Align stock balance sheet. And you can see here, after the actual earnings report last time, it said that Align stock had accelerated a repurchase program, and it was to repurchase 200 million of its common stock. And it also has 200 million remaining for its repurchase under the May 2018 repurchase program. The cool thing is that Align announced a lot of advertising partners with a lot of sports team in there. There was a couple of other information. It also said that it has entered into and then it said about Morgan Stanley and its 600 million stock repurchase program, because it just has so much cash on its balance sheet. That's what it can do, and that was announced on the May the 23rd. The outlook side of it was pretty good. It said that revenue wise it was expecting 640 million to 650 million, and that would be up 20 to 22%. It also said that operating margin, it was going to try and increase that from 22% to 22.7%, which would be good because the EPS is kind of like being the only kind of like weak side of it and the margin side of it. So if they could get that margins up just slightly, that'd be really good for them in the fourth quarter. And it said here that in addition, it's expecting to repurchase at least 100 million of its stock in the Q4. So that pretty much is a hint that they think that the stock is pretty cheap. They're trying to use the cash to buy it. And also, a good thing with that, guys, is that you can pretty much know that someone is going to be buying Align stock in the next quarter. So it does mean that probably the stock is going to go up slightly because of them buying their own stock back, which is good news for you as an investor. So overall, the Align stock was pretty good, guys. It's kind of like recovered from what happened the last quarter where it went down quite a bit from all that kind of earnings, and it seems like it's kind of like back on track with the revenue and the EPS growth that Align will have going forward. It looks like it's in a good position from here. And from my kind of view as an investor is that I think if you were going to buy the stock, you've kind of missed it now, because you should have bought after the earnings report, and I don't really see the stock going down to them prices. From my kind of view as an investor, like, it is quite an expensive stock, don't get me wrong. And for me, I would sell a Align stock somewhere in the $300 mark. I'm not exactly sure where I would sell it, but I'm happy where it is right now. And like I said, I've not got no plans to sell it right now, because I would sell probably in the $300 range. But it's good as an investor to see that little bounce off them lows, and hopefully this positive news and the repurchase program will hopefully over the next quarter start leading this stock back up to the $300 mark, which would be pretty awesome as an investor, guys. So that's me talking about Align stock today, guys. I hope you enjoyed it. I hope you had some useful information from their earnings report. If you could give the video a like, subscribe if you haven't, and I'll see you in the next video.